Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Really pretty massive rally in equities, certainly after the first round of the French elections. Really sort of going almost according to plan. The surprise was that Marine Le Pen only came out second, Macron came out as first, and those two will now go through to the second round on May the 6th. Looking at it, Macron sort of centre-left. It's hard to see how the other parties are going to look to migrate their vote over to Marine Le Pen, who's obviously clearly very far on the right. So most polls now are predicting a Macron victory in the order of sort of 15 to 20% in the polls. Now, obviously, polls have been wrong before, but it looks a pretty compounding sort of margin of victory, and we'll be surprised if that's overturned. That's obviously the first piece of good news. Really pretty major rally in European equities, as certainly Macron is sort of pro-France, but obviously pro-Europe as well. And so that would be just a little bit of solidarity for the eurozone, especially as you still got sort of Brexit bubbling away in the background. The other big stories to sort of take equity markets, especially in the US, is talk about this sort of tax reform now coming out of the Trump presidency. It hasn't been in power yet 100 days, but a lot of talk coming through there, especially from the Treasury Secretary. Looking at it, if you get a major sort of reform, potentially could sort of increase earnings in the S&P 500 companies by around sort of 8 to 12% on the upside. That's obviously a pretty major increase. Also, as well, you've got a potential repatriation of these offshore funds that are sort of sitting there in sort of tax havens, etc. Obviously, you're going to have to pay tax on those, but that's going to be a sort of one-off and then a little bit of a sort of trickle down. Trump's really just trying to get this money back on shore, back into the US, and more importantly, back into the US economy. Again, if that is the case, there's potentially close on a sort of $1 trillion flowing back into the US economy, which is all sort of pretty positive out there for equities. Just really based on those equities and sort of price earnings, if you do see that sort of increase of sort of 8 to 12%, then on current price earnings ratios, equities aren't expensive, and that's why I think you're seeing potentially this sort of further increase and rally in US equities. Also, that may just help the Fed as well as they look to sort of try and reduce the balance sheet. Obviously, on the back of all the sort of quantitative easing that's taken place over the past few years, and just looking to reduce that balance sheet a little bit. A lot easier, obviously, with the economy growing at and a pretty robust growth going through into the US economy. Oil hasn't managed to remain above sort of $50, sort of trading that sort of range 48 to 52 at present, and it's just going to be interesting to see how that sort of plays through over the sort of second half of the year. Here in New Zealand, a minor sort of cabinet reshuffle as PM English just looks to tweak his cabinet before the election. Nothing too major. Also coming into sort of year end as well on the KiwiSaver, really need to make sure you've got enough contributions out there to try and get the maximum tax credit. If you're unsure on those numbers, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. As always, New Zealand investors looking for income. There are also plenty of options out there. And it's just going to be interesting with a potentially rising interest rate environment. See what happens to some of these fixed interest portfolios. I think it's certainly a pretty good time to review those and just take stock and make sure you've got the right bonds going forward for a potential rate increase environment. Call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.